Hello Phil, thanks again for joining Blue Notes and basically coming straight from the rate review decision meeting. What was the decision?
So we've decided to move our standard variable rate for our home loans down by 25 basis points, which is the same as the movement in the Reserve Bank cash rate that was announced on Tuesday. Importantly, the effective date for this change will be Thursday next week, the 12th of February, and that's a full 8 days earlier than most of our major competitors have announced. So I think that's an important customer benefit.
And indeed that seemed to dominate a lot of the media coverage, the effective date of implementation, not just the rate itself.
Yeah, I have to admit I was a little surprised that our competitors have variously allowed, in some cases even more than 2 full weeks, nearly 3 weeks, for the implementation of the rate reduction. And as I said, I think our customers need to see that rate flow through a lot more quickly than that, and that's why we'll be making it effective 7 days from today, which is Thursday next week.
Because there is a lot of moving parts behind these decisions. I think most people realise that there's lots of different elements to banks' funding and things. What were the sort of key moving parts, apart from the obvious, the Reserve Bank cutting rates?
Sure. Look, and we've in the past, I think, tried to have a more open discussion with the community at large about bank funding costs, but there are a whole range of deposit products, and we've seen that the cost of those does move down. For many of the deposit products, of course, because they only pay a very low rate of interest already, there's very little further reduction that's possible. So it is true that as rates get lower and lower, the bank's margins do get squeezed, and we need to look at that. But other things have, I think, helped the picture overall. And it is true that the wholesale funding costs, which was a big issue 2 to 3 years ago, has eased a little bit over the last year or so, and I think that's taken some of the pressure off the overall margin of the banks.
And the other issue that's come up now with rates where they are is that the danger of a housing bubble. Is that a sort of monetary policy issue, i.e. the more rates come down, the more likely we are to have a bubble, or is that more prudential, or is there other elements there?
I think, and that's a very live debate at the moment in this sort of official community among the various government bodies, that low rates do encourage people to go out and buy assets, and that would be good if they were investing in new productive capacity in business, but if all it does is push up the price of existing assets, then that creates the concern around a bubble. So monetary policy has a role to play, but it's a difficult one because monetary policy applies equally to everyone. So other arms of government have been looking at other ways of trying to take the heat out of the housing market. So we've seen moves by ASIC, the Securities Investments Commission. They've been looking at their obligations under responsible lending and pushing financial institutions to make sure that we fully comply with all that. And APRA, the prudential regulator, has been looking at banks in terms of some of the higher risk categories of lending to make sure that they're not getting carried away. So they've got 2 bodies of government, both trying to use non-macro policy to affect the housing market.
And do you yourself have any concerns about the heat in the housing market?
I am cautious about it. It's not just the housing market, it's really all asset classes, and I think you'll have seen that the stock exchange has risen strongly this week with this rate reduction as well. So there's no doubt that any productive asset is seeing some upward price pressure when other interest rates in the economy fall. So I think we do need to be cautious. We've had a pretty good look at our own home loan standards, so the lending we do, the current book. I'm very comfortable with where we are as at today, but it is one where, as you look ahead, you do need to be cautious.
Look, thanks again for your time, Phil.
Thanks.